We, in fact, probably about 3 months ago, saw the peaks for the 3 to 5 year fixed mortgage rates. They have come down in anticipation of, well, the peak being near, and then interest rates or monetary policy easing not too far down the track. Well, hello again everybody, and welcome to another one of my weekly videos with NZHL, having a look at the things moving the housing market around in New Zealand and obviously interest rates. Now, in a week's time, I'm going to do my monthly Tea with Tony video, and there are quite a few things to be discussing with regard to the factors moving the housing market around in particular. We're seeing a bit of a building up of stuff suggesting that the bottom has been reached in the market, and rather than sort of give it all away now and run through a bit of a summary or anything, for this quick video I'm just going to concentrate on what has been the key piece of news relevant to the housing market over the past week, and that has been the Reserve Bank's 6 weekly or so review of the official cash rate. And for this one they also had a completely new set of economic forecasts to take into account as well. Now, the markets were all prepared, like myself, I talked about it on the TV that morning, for the official cash rate going up by 0.25% to 5.5%, and so that's what it did. So nothing too much interesting there. However, lots of us have been seeing things like the booming migration numbers and the loosening of fiscal policy in the government's budget recently, and had expected that the Reserve Bank would still be fairly cautious and say they might have to increase interest rates further. Well, they did not. In fact, on the day, and then with some comments in the week since then, the Reserve Bank have been, I think, at pains to stress they really do not want to take interest rates any higher. A key factor behind that is the fact that almost half of fixed rate mortgages are coming up for renewal in the next 12 months. People are obviously going from something nice and low, 3.5% or so, up to, let's say, 6.5%, and the negative impact of that on household cash flows has not yet been felt in the economy. That is one of the big lagged effects of monetary policy tightening, which started officially in October 2021, but you may recall we actually saw the fixed mortgage rates rising in anticipation of that in about June, July of 2021. So interest rates look like they have peaked now. We, in fact, probably about 3 months ago, saw the peaks for the 3 to 5 year fixed mortgage rates. They have come down in anticipation of, well, the peak being near, and then interest rates or monetary policy easing not too far down the track. Now, the Reserve Bank, they don't expect to be cutting the official cash rate until very late in 2024. So on that basis, one would expect floating mortgage rates don't go down until late 2024. The 1 year fixed mortgage rate, maybe not until the middle of next year. Before then, some slight decreases in 2, 3, 4, 5 year fixed mortgage rates. Most of us, however, think that they will probably move before then. I don't know about this year, but maybe early next year is a possibility. But it certainly has to be admitted that uncertainty about the track for inflation remains particularly high, both here and in overseas economies as well. One thing you might have noted, with monetary policy still tightening probably in the United States, and yet the Reserve Bank getting a bit dovish in New Zealand, the Kiwi dollar has actually fallen by about 2.5 cents or so, and it's been a while since we've seen anything of much interest on the exchange rate side. Good for exporters, but it could mean a little bit of upward pressure on the prices of some of the goods we buy that come in from overseas, as in most of the manufactured things that we purchase when we go out and do a decent bit of shopping. I'm a bit concerned that maybe for the next few quarters, I might not have all that much to say, quite frankly, when it comes to what interest rates are doing. I think it is going to take a heck of a lot of evidence for the Reserve Bank to actually step forward and say, you know, we might cut interest rates sooner than September or so of 2024. So I don't actually expect to be making any big changing comments on the interest rate outlook, quite frankly, for the rest of this year. That's okay, because there's going to be plenty to say about the housing market and some of the major factors which I think are now coming into play and will slowly feed into people's thinking about what they're going to do with regard to their house purchase. But I'll be discussing that in about a week's time. All the best out there.